Okay, good afternoon, folks. Just get yourself settled. I'll be with you very, very soon. Just doing the final checks. Okay, good afternoon, folks. Good afternoon. Good afternoon. Mayor, panicking there. Have I started? I've started now, Mayor. There you are. There you are. There you can see me now. Hopefully, you should be able to see me. Yeah. Good afternoon, one and all. Here we are again. It's turn that sound down. It's going to be echoing back. It's that time of the day again. Monday afternoon, 3 p.m. London time. Your chance to interact with me here on the YouTube channel on the live event. So, as you know, well, I've got 230,000 followers. Chance for those 230,000 followers to come and say hello to me, and please do interact. It's obviously it's all part of it, so you can actually ask me questions as we go and so forth. So let me have a quick look, see who's in the room. Nice following in here today. We've got Ali Hazi is okay. Amir, James Brand is in the room. Jason is also in the room. We've got Don Fesh all the way in from Ghana. Who else have we got? Lots of new names in there as well. Salvatore from Italy. Good to see you. And Marichelle Evans from the Philippines. Kamusta ka in the Philippines. That basically means how are you in Tagalog. We've got Bash FX from Somalia. I've got a good friend in Somalia that trades FX. Tammy Weatherton, hello in the USA. James Band as well. Okay, so what do we do in this say 40-minute stream or so? Basically, I give you a little bit of insight to what I'm looking at for the week ahead in terms of Forex trading, in terms of trading in general. First off, we start off by looking at what happened last week and just sort of giving you a bit of an overview. Then I'm going to jump onto the charts and see what's going on in the market. It's a bit of a slow start to the week this week. And then I'm going to go through a very simple strategy. Now, some of you that have joined this stream before on Monday may have seen this, but I've just basically outlined some trading rules that I want to sort of highlight to you. With trading, it's the marketplace is a mass of all these educators out there offering you different ways of doing things and what have you. And what I found over the years is, quite frankly, the simplest of strategies are often the most effective. The reason why most people fail is not because of the strategy. The reason why most traders fail in this business is because of process and not being able to deal with the wins and the losses in the way that a trader would normally. So today I want to present with you a strategy, a very simple strategy. I'm going to highlight the rules to you of the strategy. You can write them down. You can take screenshots, and I encourage you to go away and maybe do some back testing on them. I'm selling the strategy. There's people out there selling strategies for thousands and thousands of dollars. Strategies are simple sort of trading rules. Quite honestly, you can make up your own strategies, back test them, and as long as you've got the slightest edge in the markets, then it should be a profitable strategy. But it's how you deal with it when you have losing periods. That is the biggest problem for many traders when they come into trading for the first time. So this strategy is very simple. You can take the rules down. I'm also going to trade it live as well towards the end of this little event to see if we're going to make a few pips as well. Sometimes we make, sometimes we don't. To be honest, it's a trend following strategy, and there's not many trends happening today. It's a quiet start to the week. Very little data out this week. So we'll see, but we'll see how it goes. Right, so quickly, what's happening last week? Okay, so last week was really dominated by what we call the risk on, risk off. Okay, now without going into too much detail, risk on in the market is when investors, hedge funds, are taking on more risk. They buy the stock market. They're taking on high risk assets, and that basically affects the currency markets. Now, last week we saw a case of risk off, i.e. the stock markets were wobbling across the world. And when stock markets were wobbling, you saw some currency flows into the safe haven currencies, typically the Japanese yen, the US dollar. These have been performing in terms of risk off, and that's basically what you saw last week. The markets were under pressure. It was definitely risk off, and that's why you saw the dollar hit these big highs. For those of you that followed the trade last week, the New Zealand against the US dollar, on that trade we took 250 pips profit. I think we took on that one in the end, which is quite nice. I'll look at the charts in a minute and show you. Just in terms of the economic data last week, I mean, we had a lot of central. I haven't put it on this document here, but there's quite a lot of central bank decisions last week. We had the Swiss National Bank, RBNZ National Bank, basically all deciding to keep rates unchanged. But the only real data we had last week was really, I think, the most important thing was the Eurozone, the Eurozone PMI data. Now, PMI stands for the Purchasing Managers Index, which is basically a forward-looking indicator. A lot of the central bankers look at that. As I'm talking to you now, I've got Lagarde in my other ear. I don't know if you can see it on the screen behind me there. She is. She's talking at the moment. I'm just looking at all this news coming across the wires, basically talking about negative interest rates and negative inflation for a long time to come. So basically, we're always looking at what the central bankers are thinking and what they're leading to. It gives us a clue where interest rates are going, and where interest rates go, it gives us a clue where the currencies should go. So PMI data last week was quite soft in the Eurozone, showing you that the pickup or the recovery since COVID maybe is hitting a bit of a wall. So the euro came under pressure, which also helped the dollar push higher. So that was last week, and of course we had COVID and the UK lockdowns. So the COVID restrictions were increased in the UK. That has affected the British pound, or certainly affected the British pound last week. British pound has been the currency under big pressure really for the last, maybe the last 3 or 4 months, 3 or 4 weeks that the pound's been under pressure, and that coupled with the sort of stagnating of Brexit talks has put the pound under pressure. Now the pound today has started off on a positive note. I don't know how long that's going to continue. Fundamentally, it shouldn't continue. It is there at the moment. We'll look on the charts in a minute and see exactly what is going on. But the pound, as I say, is showing some resilience today. However, as trend followers, all trends have pullbacks along the way. Is this just a pullback in the pound, or is it indeed a trend change? I'm on the school of thought that thinks that this is just a pullback in the pound and that the downtrend will continue. And I'll show you that on the charts as well, why I think that is more likely to be the case. This week we've started off with a bit of a risk on. Stock markets have gone a little bit bid today. Not quite sure why. Don't always have to know why, do we? You know, if you look at the fundamentals and try and justify everything that's going on in the forex and in the stock market, well, you know, it's pretty challenging in itself to be able to do that, justifying why the markets are moving. The markets are moving to risk on this today. Stocks are getting a little bit bid across the board. Obviously, you've got the US election coming up. There's an election debate this week, I think, isn't there? But the market's gone risk on. Okay, so the dollar is coming under a bit of pressure. Okay, so, you know, if you are looking at the forex market, it's always a good idea to look at the stock market to see where, you know, the monies are flowing. So at the moment, stocks are pushing up and the dollar is coming under pressure. What else have we got to look forward to this week? Quite light on data. This week. We've got basically, Brexit negotiations are starting up again. You've obviously got the UK lockdowns there. There's an announcement coming out tomorrow, I think, from Boris Johnson, the UK Prime Minister, talking about maybe locking down London, locking down northern counties as well, which of course is going to be, well, it's not going to be necessarily good for the pound, is it? So markets are watching that certainly this week. A lot of Fed speakers this week. In fact, I mean, if you go to some of you that so look here, if you go to this page, we quite often I use it all the time. It's basically it's Forex Factory. Okay, it basically tells us what is out in the week in terms of economic data. There's not a lot out, but there are quite a few Fed speakers out this week. So you've got the dates here. This is forexfactory.com. It's free for everyone. I've been using this for years. I think a lot of the traders use this. Lagarde, you see at the moment, she's speaking at the moment. That's absolutely live as we speak. You saw it on my other screen a moment ago. So this week we've got a lot of Fed speakers. They tell you basically where they think interest rates are going and their outlook for the economy as well. Some of them are voters, some of them are not voters, so you need to know a bit about that. But really, because these are all yellow and orange, means they're not really high impact news events. High impact news events basically, are likely to move the markets more so. I don't know why. Well, Lagarde's red event today, and she's also red again on Wednesday, so she's speaking. So a lot of Fed speakers, a bit of PMI data out in the Eurozone again this week. Okay, so we've got the Italian, we've got the French PMI data. Markets are always looking at that, as I say. And then, of course, you've got the US PMI data out as well on Thursday. But the big event, of course, later on in the week is the US non-farm payroll. That's on Friday. It's the unemployment rate. As you know, when the USA sneezes, the whole world catches a cold. It's a bit relevant, I guess, at the moment. But at the moment, the markets are, I don't know if they're that important this day and age, but they used to be very important. I think there's bigger elephants in the room than the weekly non-farm, than the monthly non-farm. But the big news is, of course, we give away tons of money. So I give away $1,500 on the Friday. So if you want to tune in for that, make sure you register. You've still got time to register. We give away $1,500 in 3 different prizes. So you can come over to the trading room and get involved in that should you wish to. We do that live in front of everyone. I think some of you have watched it before in the past, but it is quite an important event that we like to trade. So that's basically the weeks of data that we've got out this week. In terms of the markets, let's just have a quick look to see if I'm missing any chat. What I will do on the chat, by the way, any of you that are leaving questions here for me, I will try and get to them at the end. I've also got an admin team working here behind the scenes. If they see something pertinent, they will highlight it to me as well. Mario, yes, a pound is on steroids today. That's right. Amos from Nigeria. Hello to you. Good evening. Right, so let's have a look at what is going on in the Forex world. Okay, so this is I am just going to move that to risk on. It's only today. I'm just moving that little risk on, risk off there. It sort of gives my viewers a clue of where the markets are. And they are a little bit on risk on at the moment. And I'll tell you what I mean by risk on. Okay, so if I go down to, here we go, is my mouse working? There it is. So we go back here to look at the stock market. Okay, so this is the Dow. This is the major US stock market, which I've just minimized. So the stocks all last week have been in risk off. Yeah, stocks were wobbling. Now the stocks today and basically Friday are putting on a bit of a bid, but we are coming into a bit of a structural level. Now, for this to be really confirmed to risk on, to make a proper fresh challenge at these highs up there at around the 29,300 level, we got to get past this level. So if you are trading the Forex market, I think it's a good idea to be watching where we are at the moment in the stock market. If we see a break and a close above this 127 sort of 700 level, then this could act as support, and we could see a confirmed move into risk. Risk on. Risk on basically means you're going to see the US dollar come under pressure, you'll see the yen come under pressure, and you'll see the commodity currencies. That's the Canadian dollar, the Australian dollar, New Zealand dollar. They tend to outperform. You might even see the pound go better as well. So do keep an eye on this stock market. So market's definitely kicking this week on risk off. This is the S&P 500. 3 days now. This will be the third day. So basically we found our support. In fact, you found the support literally bang on where we have that orange line drawn in of support. I haven't just drawn it on for this stream. It's been on all last week. And we put in this sort of little bit of price action pattern there to show us that this indeed is acting as a decent level of resistance and bouncing right off it. So the S&P's had a good bounce off that previous level of resistance. Do you remember in the past I've told you that that levels of resistance, supply and demand basically, where buyers become sellers and sellers become buyers, these levels of supply and demand are often respected. So old resistance will often come support. Very simple price action behavior that happens in all charts and all time frames. And it's the most simplest form of technical analysis, looking at old support, new resistance, old support. And that's basically what's happening here with the S&P 500. You're seeing the stocks showing some support. The other thing you need to look at is, of course, the implications or impact that it has on the currency markets. So here we go. So this is showing you the pound, the strongest currency at the moment. If you want any of these indicators you see me talking about, you can come over to Forex Signals. It's got the 7-day free trial. It doesn't cost you a dime if you don't want to stay, but you've got access to all this stuff if you want to come and try it out for a week, including risk managers and so forth. So I encourage you to do that if you can. Also, by the way, I've been told to tell you below here, you'll see a link to the Telegram page where we update throughout the week. Occasional trade ideas go in there, and obviously weekly reports as well we put out on the Telegram link. So make sure you save that, get this on your Telegram, and sign up, and then you can interact with us there as well. Right, so pound is the strongest currencies. These other currencies down here, you see here the green line and the brown line. That's the yen and the US dollar. That's what I'm talking about. These are the weaker currencies. Look at this orange line. Look at the purple line. These are the commodity currencies. These are the commodity currencies that are going bid. Okay, as markets are moving into risk off. So clearly, when you're trading the Forex market, if you're following trends, you want to buy a strong currency. You want to buy a currency that's got momentum behind it to the buy side. If you're selling, you want to sell currencies that have momentum to the downside. So at this moment in time, selling yen, selling dollar, intraday is mostly the way to look at it. For those of you that in that trade last week, as I said, we took this trade. I mentioned it on the stream last. You can play it back if you wish. I mentioned this as our trade idea that we sent out literally on Monday. We took 200 pips out of that trade, looking at this bit of price action pattern at the top of this trend. It's called the naked trading strategy, which we like to look at every morning. I also have this little dancing man. There you go, the naked strategy. It's one of the strategies I teach inside the trading room. Is looking for big reversals. So that was a nice little trade. We are in one. Just so you know, I am in one outstanding naked trade, and this is in the dollar against the Japanese yen. So I'm still in this trade. We took this price pattern at the bottom here. We are about 50-60 pips up at the moment. We've taken profit target 1, so our members are now at break even for the second tranche. TP2, that's take profit target 2. Still looking at this one to grind higher. Is up there at around the 107 level. Might be a slow grind this one, but we are at break even on this trade now. So just so you know, I'll talk about it next week, whether it's hit profits or hit stops, I don't know. But we are in this trade at the moment. Again, the naked strategy is the end of day reversal strategy. I don't know if I've got a YouTube video out there on it, but it's a strategy we teach and trade each and every day inside the trading room. Again, you can come over and join us, watch me talk about it every morning this week if you wish. If other setups develop. Right, so today I just want to talk to you about a very, very simple strategy that I think if you can take these rules away, write them down, backtest them. You've got to backtest. Don't rely on what I say. You don't know me, yeah. You don't know me apart from here on the YouTube channel. So who am I? Do I care about your personal wallet? Well, of course I do. But at the end of the day, no one cares more about your money than you. So if you're starting off trading a particular strategy, don't trust anyone that tells you this is the best strategy in the world. Go and backtest it. Find out for yourself. Run it through backtesting data. That's the only way to truly know and have confidence in a strategy. It's something I try to install in all our members in Forex Signals. You've got to make it your own. This strategy, very, very simple. Okay, I'm looking for simple price action patterns in the form of, let me just get my drawing tool set up, in the form of these type of patterns. Now, this is a trend following strategy, folks, right? So we're looking to get in on the trend. Remember, when you're trading, all you need is the slightest edge in the market. The slightest edge, and exploit it over and over again. It's a cliche, I know. I talk about it all the time. But the casino, the casino has, the roulette wheel. It's got 37 numbers. 36 numbers and the green 0. But it pays out 36 to 1. The slightest edge the casino roulette wheel has is that 0. And that's what it's exploiting. And it wins all night long. So all we need is a slightest edge. My edge is the trend on the higher time frame. So I look at the trend on the higher time frame. I look for a pullback into the trend. Is it a pullback or is it a reversal? I don't know. I use these price patterns to help me, give me a clue. So for example, you've got the trend moving up here. And then you have this little pullback, which is this red candle here, for example. Yeah, there's the red candle. Red candles, if you understand, candlestick patterns are candles that basically closed lower than where they opened. So this candle basically opened here and closed here in that particular time period, whatever it is, 4 hour daily or whatever. So it closed lower. This is a bearish candle. It's a red candle. And then the following candle, the last candle, fully engulfs the previous candle. That gives me a clue that this here is a pullback and not a reversal. Yeah, we don't know. We don't know if it's going to be a reversal or a pullback. This gives me the clue that it's a pullback. Okay, that is what I call, or we call, a bullish engulf. And by the way, folks, I didn't make these up. These are industry standard. These have been around for centuries. These Japanese rice traders used to trade this type of stuff many, many moons ago. Then, of course, you've got the you'll have the bearish engulf, exactly the same, but in reverse. Yeah. So the markets are trending down. I've got nice downward trends in the higher time frame, and I see this little bit of price action coming in here. This is a blue candle. Yeah. That blue candle there tells me that the market basically closed higher than where it opened. Means the buyers are in control here. Okay, so buyers are now taking this back. Is this a pullback? Or is the trend going to continue back down? I don't know. But when I see that type of pattern there coming in, it gives me an edge. Not all of them work, of course they don't. But it gives me an edge and something to hang my coat on, a rule to hang my coat on, that it is indeed a pullback. I look to see the break of that. I'll take that lower. Remember, I want to see the trend on a higher time frame in that particular direction. Very, very simple bit of price action. Another one we look at, okay, and then I'm going to get onto the rules and then we'll get onto the charts and see if we can make some money. Bullish pin bars, exactly the same thing. We see an uptrend, yeah, and then we see this type of candle coming in. This type of candle with a really low or really long single line here. This is known as a shadow or wick. Okay, this shows you that the sellers are taking this currency pair down during that time period. But then the buyers come in and we close above. So it doesn't matter what color these are. Shows you that the main body of the candle is up here. This shows you that the buyers are now in control. This shows me that this little pullback is indeed a pullback and potentially will continue. Bullish engulfing patterns. You find these in uptrends. And then, of course, you've got the downtrends. Bearish engulfer, exactly the same, but in reverse. You see those coming in. Yeah, seeing a pin like that gives you an indication that indeed this trend wants to continue to the downside. Very simple bit of price action. We have this with a few other rules. Very simple rules. Write these down. Go and backtest them. There you go. Trading rules. Confirm on the higher time frame using the gamma array. We'll talk about the gamma array in just a second. Maybe I should have put that other slide there before this one, but there you are. Confirm with the trend on the higher time frame gamma array. I'll talk about that in 2 seconds. Identify the pullback into the array with an engulfer or pin bar. I've just shown you the engulfers and the pin bars. Trade is void if the price closes through the through the array of moving averages. I think is the kids coming back from school. Place in the direction of the trend at the break and below of that price pattern. Okay, so take a screenshot of these, and it will all become a lot clearer when we get onto the charts in a second. So stop loss above or below the 60 moving average. Yeah, and your take profit target at least 1-to-1. At least 1-to-1. Look for the next level of support or resistance on the anchor chart. The anchor chart is the higher time frame chart. So those are the rules. This is the gamma array that I'm talking about. You can Google gamma. I didn't make these up. It's just an array of moving averages. In fact, if you go to Investopedia.com, this is the Guppy array. You can read all about them there. I didn't make these up. It's basically, look, they use the 358. I use the 4, 6, and 8. I think Investopedia maybe got this wrong, but it doesn't really matter. It makes no difference whatsoever. But it's basically an array of moving averages. It tells me the strength of the trend. When all fanned out like this, and these are EMAs, by the way, exponential moving averages. So when you can take a screenshot of these numbers, or you can go to or you can go to Investopedia. But these, when they're all fanned out like this, it shows you that there is a very strong trend. Okay, no crisscrossing. We don't want to see crisscrossing. If you see crisscrossing, chances are that there may be a trend change going on. So I use the 4, 6, 8, 12, 15, 18, 21, 30. There they are. And the important 60 moving average as well. So when we're seeing the pullback, we don't want to see the pullback. We don't want to see price below here. As I say, it's void if it trades to the other side of the array of moving averages. It's got to close in here. And then we look for that type of pattern. In fact, there was one there. You can see it here. I just took the screenshot a minute ago when I came on, but there's a really good pullback pattern there. Whatever time frame this is, it's literally just a screen grab. But that would have been the trade entry. I haven't just cherry picked that. There's going to be some that don't work. I mean, look at this one up here. This is a bearish pin up here. You wouldn't have taken that trade because the trend is up. Yeah. So we need to be looking. We need to be looking for a pullback into the array with the direction of the trend. Those are the rules. Okay, you've got them written down there. So I just want to skim through these now. You can write them down. You can ask me questions. If you want to come into the trading room, you can ask me more questions as well. You can engage with me live in there as well. Right, now let's have a look at the price chart. Let's have a look. Dollar yen not doing very much. Just go now over to this. We'll see if we can. We've got 15 minutes. We'll see if we can make a few bucks using that. Okay, this is literally where I took the screenshot from a minute ago. This is a real live chart now. So we'll close that one down. What I'm going to do here, guys, rather than me sit here watching, I've got some screens here. I've got some screens. I've got loads of screens. Look at them all there. But rather than me look at all the screens, I'm just going to use this pattern finder tool. Okay, and this is going to do all the hard work for me. So I am just going to trade the, let me just move that over there so you can see it. Okay, so I'm looking here at the 1 hour, the 15 minute and the 5 minute. I'm going to look for the engulfers and I'm going to look for the pin bars and it's going to do the work for me. Activate scanning, there you go. Right, lots of trades have come up there. Let's just have a look at this New Zealand Swiss. I mean, obviously we're scalping here, so we're going to go down to the 5 minute chart, 15 minute and so forth. But the higher up you get on the time frames, I personally think the more accurate they become. But there you go. That's just me saying that. Let me just move that over there. Okay, so if I click on view, it's found the patterns for me. Okay, you've got a red arrow there telling me it's a down arrow. It's a down pattern. Well, are you going to take that trade? It's pulled up because of this pin bar here, yeah? Look at the trend. The trend isn't up. Look at the higher time frame, the 4 hour. Trend, look, the trend is all crisscrossing, mashed up in the middle. So that trade we just ignore. We don't take that trade. I'll clear that one from the book. Pound New Zealand, 15-minute pin bar. Let's have a look here. See, look, we've got a bullish pin bar. Look at these moving averages. This type of pullback is dangerous to get into on the trend. Yeah, because it's been, it's not just a quick snapback. It's price action, some serious price action going into that moving average. Although it's a bullish pattern, I can see on the high time frame chart. Well, actually, the high time frame chart is not too bad. On the 1 hour, it's most probably up, but on the 15-minute, these pink moving averages, as you can see, let's see if I can make it bigger for you. Crisscrossing, so we don't take that. Golden solution, high to you too. What moving averages do you use? Scott Nicholson said, I did show you that. It's the Guppy array. The gamma array, which stands for Guppy multi-moving average, I think it is. Anyway, so we're not taking that one. Close that one down. I've got another minute before the next candle closes. Let's have a look at this. We won't take that one. What about the Aussie Yen 5-minute engulfer? Down arrow. It's a down trade. The trend is up, guys. We're not taking it. There's nothing wrong with not taking a trade. The biggest problem people have when they come into trading is they feel they've always got to be in a trade. They've always got to be there. Did you ever see my video? When I'm there walking the dog, and I think it's got 1 million views or something. There you are on the phone, always waiting to be in a trade. The excitement of it. Nothing wrong with not being in a trade. Only take the trades that confirm with your rules. So that one is off. Aussie Yen 5-minute golf. We check that one. No. What about Aussie Swiss? What about the Aussie Swiss? I mean, these are now sort of half an hour old, so we won't be taking them. But Aussie Swiss 15-minute engulfer. Let's have a look here. Well, okay. So there is a trade set up here. 15-minute. Nicely fanned out moving averages. We've missed the trade now because it's 15 minutes ago. It's half an hour ago. Let's have a look at the higher time frame. Now, I would not be taking that with my money. I don't like these moving averages. Nothing wrong with not taking it. 1 hour moving averages, not defined, not there yet. I'm not taking that one. Now, I have no problems not taking a trade. Now, I also have no problems with respect coming on here on YouTube in front of thousands of people and saying, no trades today. I have no problem saying that. We took a trade last week, if you remember. We made money on it. I can't remember what it was now, but you can play that stream back, I guess. Let's have a look here. So we just had a Aussie New Zealand 15-minute engulfer. Oh, that'd be interesting. I'm short Aussie New Zealand. I'm short already, as you can see on here, from a trade set up this morning. The reason why we shorted it this morning, just incidentally, was because of this pullback into, look at the trend on the higher time frame chart. We pull back into the previous level of support. It's a 50% pullback. One of the classic rules I look for is a 50% pullback into previous structure, and that's why I've taken a short on that trade. Slightly offside at the moment, 10 pips offside, but what is it? Yeah, 8 pips offside at the moment. But that's my current trade. And I've got my profit target down there at 106.50, by the way, and stops at 108.30. That's a real account I've got on there at the moment. So anyway, in terms of pattern finder, not going to work for us on that one. So I'll close that down as well. a shame we've only got 15-20 minutes on the live event here. Let's have a look here. Oh, look at that bearish pin. It's a really nice bearish pin, guys, but rules are rules. Not fanning out. Look at this, you see. The 5 minute on the upside, there's lots of opportunities here to get on this trend to the upside. Look at that one there. You'd have had that one there. You'd have had that one there. You wouldn't have traded there. You would have traded there. You would have maybe 13, 15 pips out of it. Your stop would have been 17 pips. Maybe got stopped out on that one. Who knows? Yeah, bearish bit of price action. Bearish bit of price action, but with the higher time frame trend. Okay, so this is the 5 minute chart. So if you look at the hour, the trend is down on the hour. So we don't take that. We've got about 2 minutes for the next candle close. Just to close some of these off because they're all old now. What is this Aussie dollar? Oh, it's interesting. Aussie dollar. Bearish pin. See here, I said to you the rule, if you close outside of the array, the trade is void. So here you had that pullback, but it closed just outside of the array. So it is actually a void trade. You don't take that. Right, 8:13:21 EMA. Yeah, I use the 8:13:21 EMA. You might have seen, I bet, my other strategy out there on YouTube. Abel says, can I do the rules again? Okay, just very quickly there you've got the rules. Take a screen grab. I don't want to keep it up for long because I want to see if we can make some trades. But there's the trading rules there. Take a screen grab. Or you can come over to the trading lab and talk to me in the Forex Signals, and you can stay for a week. Don't like it? Don't have to stay. There you go. Got it? Okay, right. Let's have a look. Right, we got 25 seconds. Can you see the clock on the wall above me there? I'm looking at that clock. 15 seconds, a bit late for you. I think it might be a bit of a delay on YouTube, but we'll see. We got 10 seconds. See what comes up. And then we've got wait for the next 5 minutes. Here we go. Right, we've had a 5 minute Swiss yen pin bar. 5 minute Swiss yen. Remember, this tool is free. If you want to come over to the Forex Signals, we don't sell it. Not for sale. But it saves you a hell of a lot of time. And remember, you can be doing this on a 1 hour chart. You can do this on a 4 hour chart. If you guys are, some of you I know are, you're working throughout the trading day in your regular jobs. You might want to be trading this on the 4 hour chart. Yep. You can plug this in. It will send an alert to your phone. Pings your phone when your boss isn't looking. You can look at the chart. See if the 4 hour setup's there. If not, go back to your day job. You can trade this on all time frames. Trends happen on all time frames. Obviously, I'm doing it on a 5 minute, 15 minute chart here for the stream because I'm trying to get a trade away in the short time that I've got with you. But this strategy, very simple. You can toss the coin and be right 50% of the time. People still lose money. All right, this is a bullish pin bar on the 5 minute chart. Look at the downtrend. I mean, look at this opportunities here on the 5 minute chart. You've had three. This is the 5 minute chart on the 1 hour. Sorry, I beg your pardon. It's a 1 hour chart. Look at the opportunities you've had here in this to get involved on these on pullbacks. Yeah, I mean, I'm just showing you this now in hindsight because there's no trades. But look at this pullback here. That pullback there. You'd have been in that trade. This bearish pin in there. You'd have been. There's another one there. Great little pullback. Yeah, you would have been. You would have been in this one here. Yeah, you might not have got any money out of that. Oh yeah, you would have got 60 pips out of that with a 70 pip stop, maybe close to that one. But certainly there, you'd have made money on. This one here, yeah, you'd have had a entry there and you would have just been stopped out a minute ago. They don't all work, but when they do, well, it's just exploiting the edge. And of course, if you're looking at next support and resistance, then indeed, you can get some really decent risk rewards out of this as well. So there you are. The other thing, while I'm on here, while I'm killing time waiting for the next 15 or 5 minute candle to change, we just do 2 more, yeah? So we've got another 7 minutes. I just want to show you something that you've got to use. Whether you are new to trading, whether you're an experienced trader, I tell you now, if you're not using one of these risk management tools, I hate to say it, folks, but chances are you're gambling. Yeah, this makes sure that you control risk on each and every trade. Got to get one of these. You can get them off. You can get them from. Well, I think you can buy them elsewhere. We don't sell them. It's free. But make sure you control risk on each and every trade. I've got mine set at 0.5% risk. I'm never going to risk more than 0.5%. Yeah. I can have multiple entries. I can switch to a double profit target. So I want to turn on my trading tool at the moment. Let's assume I wanted my. I'll tell you what I'll do. I'll put in a pending order. So this is the yellow line. Okay, I may be waiting. This is not the strategy, by the way, but let's say I'm waiting for a pullback. Yeah, I put my red line down there. That's my stop. Yeah, here's my profit target up here. It's going to work out the risk reward for me. It's going to work out the lot size for me. Doesn't matter where I put the stop. Yeah, doesn't matter. If I need my stop down there, I need my stop down there. But I'm only going to be risking 0.5%. On this account, it's $130. So, it's important that you use one of these risk management tools. I'm not going to, well, I can put a trade in here, make sure I don't get, so I place the pending trade, place the pending buy order. That has now been sent to the market. I better delete it quickly because it is a real account. So I just want to delete that. But you've got to have one of these risk management tools, guys. Now, you can trade percentage risk, or you can trade fixed amount or fixed lots. I suggest you use percentage risk. You can set this default to 0.5 or whatever you want to use. Einstein, remember Einstein? He said a lot of things in his time, didn't he, Einstein? He said compound interest, 8th wonder of the world. I don't know if he said it or not, but anyway, compound interest, 8th wonder of the world. Those that understand it earn it. Those that don't, they pay it. If you've got a credit card, you know all about compound interest. Fixed percent, each and every trade, build the account over time. Only way to full-time, to consistent success. Your exposure becomes bigger, dollar-wise, when you're making money, contracts when you're losing money. Protects the account in drawdown. All right, we've got another 5-minute candle coming up. Let's have a look. All right, we just had a pound CAD throw up here. Pound CAD 5-minute pin. That's a bullish pattern in a downtrend. We ain't taking it, folks. I don't think we're going to be lucky today in trades, but that's the way it goes. I'm not taking trades just for the sake of it. Thanks, admin. Yeah, someone just typed in, take a free trial, the pattern finder tool. You've got it there. Oh, by the way, if you here's another thing. Or maybe admin can drop this thing in for me. If you can also use this lot size calculator, we've made available now. So bookmark this page, whatever it is, www.forexsignals.com/lot-size-calculator. Maybe Kim, you can drop that link in the room as well for me, so people can bookmark that. It's, if you don't want to come into the room, you can also use the lot size calculator there on the room as well. You can type in all the different instruments there, and you can type in the amount and so forth, entry levels and your stop levels there, and you choose your deposit account if you're using US dollars and so forth. The percentage you want to risk on the account, fixed balance, you type in there your 0.5% or whatever it is you want to put in. And then it does all the calculations for you. So make sure you've got a risk management in there. Right, folks, we've got 3 minutes. If we don't get a trade in 3 minutes, I'm out of here. But we will see. Remember, nothing wrong with not trading. You only want to take the trades when they confirm with your strategy rules. 10% trade is the way too high. Yes, it is, George. Who's risking 10%? Who's risking 10%? 10% on a trade? I've had 10 losing trades in the past. Bounced out of the game, I would have been, with 10% risk. I would suggest personally you don't risk more than, look, my target on a monthly basis. Oh right, someone said that, George. Well, my target on a monthly basis will shock a lot of people, but I'm realistic, and I've been around for 30 plus years trading these markets. I've only been in the Forex market for 15 years, or 15 years, yeah. But you know, I target 4 or 5% a month. That's almost 80% a year. You know, you prove you can do that consistently. Come and see me. Absolutely. What's your thoughts on the firm prop FTMO? Yeah, I got a couple of members in the room, Scott, that have just been approved from FTMO. This is an independent prop firm, nothing to do with me. But basically, you have to pass certain tests, trading tests. You need to make 10% in a month. 10% I think in 30 days. You have to go and check the trading rules. I don't know, but yeah, they're a good outfit. But they know that most people fail. You know, I know their business model. Most people fail. You've got to pay to take their test, a few $100s or whatever it is. You know, but if you pass their test, you get access to the account. You get access to 100,000 or 50,000 or whatever it is you signed up for, and they will honour that. So there's no scam outfit there. But most people won't pass their test. But you know the rules before you start. But I've got a couple of members in our room that have just passed that. They're following a couple of my strategies, in fact. The nakeds and this propulsion, well, not this propulsion, but another propulsion, the pullback strategy, and they passed, and they're trading now FTMO money. So yeah, but there are other prop firms out there doing the same thing. It's certainly worth checking them out. I've never used them myself, but I hear good things about them and others. No, the calculators, Shubham, are free. We don't charge for those. All right, got another minute to go. Before the next pattern, and if that's not going to happen, I'll love you and leave you. George FX, Forex Signals helped me pass the challenge. I didn't know, George, you were in the trading room, in our trading room. Well, if you are, good stuff. I've spoken to you privately, have we? No, it's not a scam. Not a scam. Definitely not a scam. But you know, you've got to know the rules. But you've got to know the rules. The only reason I think I would struggle with FTMO personally is because I am definitely of the school of thought is if there's no trades, I'm not taking a trade. So I could be sitting there. You know, I like to trade the higher time frame charts. You know, 1 hour, 4 hour, and daily. You know, so for me, I might not trade. You know, I'm only trading in a high probability setup. So I don't know if I'd make that 10% in a month every month. Might be hard for me to do that, but you know the rules. Right, there we go. Last pattern's just been thrown up. We've got the Euro Swiss 15-minute engulfer and the New Zealand dollar 15-minute engulfer. Let's have a quick look. Euro New Zealand 15-minute. Oh, look at that. Bearish engulfer at the top. By the way, the naked strategy, for those that don't know, I talked about it a couple of times now. You know, the naked strategy, those are reversals, and we're using these price patterns at the same. Why is it every time I say naked that little man pops up? What's all that about? So the naked basically is looking for these reversal patterns at levels of support and resistance on the higher time frame. Slightly more, some more rules for that strategy as well, but again we teach that in the room. We trade them locally, but that would have given you a bearish pattern at the top here for reversal. I don't trade reversals on the 15-minute chart personally, but I know some that do and do it very well. Right, lastly, New Zealand dollar. Ooh, took a lot of money out of New Zealand dollar last week. Flat now. Nothing going on. Oh, beg your pardon. Yeah, there you go. Back over there. So there you go. So yeah, back on that one. We're looking at so this one was the New Zealand against the US dollar. Flat going on there. Nothing going on. And the other one, when I didn't have the charts up, was basically the Euro Swiss 15-minute. Okay, bearish pattern at the top. Yep, sorry, got that wrong. Didn't switch my stream deck over accordingly, but there you go. You can see it there now. Bearish pattern at the top. You know, that is, you know, a naked setup on a higher time frame chart. Is this session on a daily basis? No, Shaboom. We do it 5 times a day. We'll come over to the trading room, but I just do this on a Monday. So make sure you follow me. If you don't follow me already, don't forget to hit that notification. That way you can be notified the moment the next video has been released. Leave a comment as well. Let me know what you think. Yeah, nice comments, good comments. I like all comments. Got one a couple of weeks ago. You spend so much time making these videos, mate. You should spend more time on your body. All I can see is a short little fat man in a pink shirt. Well, thanks very much. All comments welcome. Right, folks, I'm going to leave that there. Hopefully you can take something away from that. Come over to the trading room. Join me over there. If you've got the inclination to do that, make sure you say hello to me when you do come over, and then I can roll out the red carpet for you, introduce you and show you around personally. If you want to do that, that's great. We stream live 5 or 6 times a day around the clock. Just also started off with we've just got a new guy employed as well, who's an option specialist that I used to work with many years ago on the London trading pits. On those, you can see us there on the coloured jackets. He used to work on the floor with me many years ago. His name's Paul. He's going to be focusing on options, so Forex and index options as well. So any of you that want to learn more about options, how to capitalise on those. These are not binary options, by the way. These are just regular vanilla options. So we're teaching that. He's put a whole series of modules together, teaching you about that. So come over, you can have a trial of that as well. Be lovely to see you in the room. If you're not inclined, no problems. I'll see you next Monday at the same time for another live event. Thanks for tuning in, guys, and have a good week. Watch the presidential election later on this week. Could be interesting.